Hey, I'm Scott Cole from whentobuyandSellStocks.com, and I just want to do a quick video to give you a trading idea for getting on board a higher momentum stock. Now, if you've ever had the chance, and I suggest that you ultimately do, is go pick up a book on technical analysis. John Murphy has written a book on it. I believe there was a book out by a gentleman by the name of McGee years ago talking about various chart patterns that you might be able to see. But you can also employ these into actual trading methodologies. And years ago, a trader by the name of Curtis Arnold released a book on chart patterns and how to actually employ them into a trading system. And I think it's a really good read as far as learning how to employ these chart patterns. So what I've got here is a stock of Adiana Pharmaceuticals, and what I've identified is your classic triangle type of a chart pattern, and you can see it defined by this peak right here, this low point here, this peak here, and another low point here. So what I did was, with the two peaks, I drew a trend line. The two low points, I drew a trend line, and as you can see, the apex is over here. When the stock breaks out of this pattern, and we're only looking for it in an uptrend, this is not something that you would see in an uptrend and you want to trade it short if it breaks down to the downside. If it breaks out to the upside, basically a chart pattern like the triangle is a continuation pattern, and we want to look for these as a low risk opportunity to enter a long position. And if you see it in a downtrend, you would look at it as a low risk opportunity to enter short. So ultimately what happened here was it broke out on this day near a tide about $1.38, and then the following day it really continued on upward, and as of Friday's trading, it closed at $2.18. So ultimately what you would want to do is get your trailing stops in place once the stock breaks out. The initial stop loss you can place, where I would prefer to place it, is below this low of the last swing low in the chart pattern, which would have been $1.20. So I would place my stop below there. What Curtis Arnold would do was he would figure out where that apex of that triangle was, and he'd use that midpoint figure. So right there, that particular price was $1.30, and that would give him a tighter stop. He was employing these in futures markets where you got a lot more leverage, so he liked to have a much closer trailing stop. I found that after the breakout, a lot of times the instrument would actually pull back to that level before swinging up, so I wanted to give it more room. But this is a great chart pattern. What I would then do is have my trailing stop in place, my initial stop loss, I should say, and then a trailing stop once this instrument has exploded in price to the upside. I might trail it at a 10-day low, or I might look for another swing low like we see in the chart pattern, and just trail it that way. But these are great patterns to hop on board a stock, and I really like them in these cheaper stocks because They're not as widely followed, and you're going to find these patterns show up a little bit more regularly in the cheaper stocks than you will in the more regularly followed stocks. So just another example, let's have a look at another stock, and here you can see I've got a swing high here, a swing low here, swing high, swing low, and then the breakout. So this is another very recent chart pattern. So what I would do is, I apologize for that little pause, the phone rang. So what I would do then is I would draw a trend line. And start it there, take it to the top there. And really that's the only trend line I really need to draw. I don't need to draw that other one, but I'll draw that too, and you can see the triangle a little bit better. And your apex would be over here if you wanted to use that as your stop. That's at $4.59. Your breakout price is about $4.71, and the following day it actually closed a little bit below that at $4.65, and then the following day it actually traded as low as $4.55. So there's an example of, you know, if you were going to use that really tight stop, you're going to get stopped out, and then the very same day you have to figure out a way to get back in. That's why I like to give it a little bit more room. When we're trading stocks, they're slower moving, you're using less leverage, so in my view you don't really got to you know, have such a tight stop. It's just unnatural for the stock, I think, to be traded that way. So then it exploded up in price, and we're now closed as of Friday at $5.36. So this is just another idea for trading, you know, these stocks, and I hope this is beneficial to you. But there's an idea for getting on board a higher momentum stock that's already in an uptrend, and you can get a decent chunk out of the trend by utilizing some classical chart patterns in this manner. So we'll see you down the road in some more videos.